it's Chris here to talk about what we should be doing in a down market. There's no doubt that our country and our world are facing some very serious challenges ahead. Inflation's high, there's fear of recession, we're divided as a nation. However, there are opportunities that present themselves to us during this time that could place us in a better financial situation in the future. What are those opportunities and do they make sense for you? So the first assessment we need to make is whether or not you have some income security. Will you have enough money coming in to cover all of your bills? Do you have adequate savings to get you through these tough times? If the answer is yes to these questions, then you can start looking for opportunities wherever they may exist. The first opportunity is Roth conversions. Now, many more people have traditional IRA accounts versus Roth IRA accounts. The short version of how they differ is that with a traditional IRA, you have put the money in pre-tax. You likely received a tax deduction in the year that you contributed the money. Now, the money grows tax deferred, and when you take out that money, you will be taxed on 100% of it at withdrawal. And there could be a penalty for withdrawals before the age of 59 and a half. Now, with a Roth IRA, you do not get the tax deductions at the time of contribution, but all of the money you withdraw in the future will come out income tax free. Again, there could be a 10% penalty on withdrawals before the age of 59 and a half. You are limited on how much you can contribute on an annual basis to both plans. And with the Roth, there are income limitations that reduce or disqualify you if you make too much money. In a down market, when you expect that the market will recover, is an optimum time to convert an IRA to a Roth. To convert, you pay taxes on the fair market value of the taxable portion of the IRA. So if you have an IRA invested in XYZ ETF, which is down 30%, and then you convert it to a Roth, you pay taxes on the fair value. If it recovers, you have made the gain income tax free. There's also the tax bracket consideration for a Roth conversion. If your income is down this year as well, you can pay taxes at a lower rate than you normally are in. There's also the risk that tax rates will move higher in the future. And if tax rates go up across the board in the future, it would have benefited you to pay taxes now at the lower rates. These conversions can be a trick and maneuver, and I highly recommend talking to your financial and or accounting professional before you make any conversions. The second opportunity here is to keep to your long-term investment plan. If you're contributing to your 401k, 403b, 457 IRA, et cetera, please keep doing it. Now, the temptation is to reduce contribution during times of uncertainty. But if you believe the stock market will rebound, which many do, keep buying. My wife and I have continued buying the fund and funding our plans. We're purchasing many assets at 20, 30% below what we were buying them at 8-10 months ago. Now, if the market goes down another 20%, we'll still be buying. It's totally reasonable to reduce contributions if you need the cash flow. If you don't need it, then continue contributions. It might even make sense to increase the contributions depending on your personal situation. The third opportunity is tax loss harvesting. If your investments are down, you may be able to sell them and deduct a loss up to $3,000 if you're filing married jointly from your income tax, federal. Be careful of wash sale rules, which means you can't sell and buy back the same stock or ETF within 30 days. You'll also need to keep track of cost basis. There are many important rules pertaining to tax loss harvesting. It applies only to investments held in taxable accounts. It's not as financially fruitful if you're in a lower tax bracket. Tax loss harvesting is most useful if you're investing in individual stocks, actively managed funds, or exchange-traded funds. Now, there are a host of others that are listed in my blog that you need to keep aware of with tax loss harvesting. It's not the easiest to undertake, so I recommend working with a qualified financial advisor or tax professional when executing the strategies. The past several months have been trying on everyone. It's human to have felt it, and something we should all be comfortable talking about. In the midst of all this, we must do our best not to let the anxiety or sense of panic overcome us, and we must remain calm. It's with this sense of calm that we can remain clear-eyed and see the opportunities that may present themselves to us. We'll get through all of this together, and when we do, I want you to be in the best position possible to reach all of your goals, dreams, and desires. I'm Christopher Klepp, and this has been your Bridge Towards Wealth.